So, you may have heard about some of the greed that people are talking about in the United States and on Wall Street, um, throughout the world. Well, I'm going to tell you some stuff that you've probably never thought about in relation to all that greed that's out there. And I like to emphasize with the one finger pointing out, there might be some fingers pointing back at me here. If you try this yourself, you'll see how that looks. I can't really make it. When you got the finger pointing out, you see there's some pointing back. All right. That was a little hard for me to do, so you only had like two fingers pointing back at you, but traditionally there's three pointing back. Okay. So um, you may have heard about the recent state lottery. A lot of different states throughout the U.S. have their state lotteries, and this guy went in and got a bunch of state lottery tickets. He put like $100,000 in state lottery tickets, and a week later he's like, "They're worthless. Who should I blame for this? Can we get a politician in there who's going to fix this situation? I bought $100,000 in state lottery tickets, and now you guys are telling me they're worthless?" I know it's weird, huh? And then there was this other guy, you might have heard about this too. Somebody borrowed some money. They like went out to the mafia or whatever, a loan shark or something, and borrowed like $100,000. Went to the casino. They had a little bit of money themselves. They went out and they lost. They had $5,000 themselves and then $100,000 of borrowed money. They actually lost $40,000, including all 5,000 that they of their own money. And then they said, the odds here are not fair. This casino it's not fair. Who's to blame for this? Can a politician come in and fix this situation? Because now I lost all my $5,000, plus there was like $35,000 that I had borrowed that I don't have anymore. Somebody needs to do something about this. So I don't know if you heard about those situations, but I mention them only because they're a little bit odd when I present those stories. But when I present stories about an insurance annuity contract or about a real estate mortgage, people do have the kind of responses that I just mentioned. Maybe even you. You might know some people like that. Again, it wouldn't be me. I would never have a response like that, except if I had many times in the past. And you might have had a response like this too. So, with regard to an annuity contract, what I like to say about annuity contracts is the annuity contract is basically some annuity contracts that insurance companies will sell to people. The contracts will say things like, no matter what happens to the underlying investments, you give us $100,000, we'll invest it in something, and no matter what happens to that, we'll pay you money for the next 20 years or whatever. We're going to pay you just a great guaranteed amount of money. So it's an investment where you get a guarantee no matter what performance happens with the investment. Now, if that sounds a little bit weird, it should. And that's a great way for insurance companies to go out of business, which can happen in the case of AIG, a very big insurance company not doing so well. Oh. Other insurance companies not doing so well. Oh. Why? Well, they made some promises that they didn't have the money to keep, which is the whole insurance industry. That's what they do, is make promises that they don't have enough money to keep. But as long as they spread it out and they have enough money coming in to cover all these promises they've gone out, then the Ponzi scheme continues. And if you're not familiar with the term Ponzi scheme, check it out. The insurance industry is basically a legal or licensed Ponzi scheme, and that's it. And if I'll leave that for you to explore. It's really a different subject. But when people say the Ponzi scheme didn't work out and they didn't keep the promise that they made to me. My annuity policy, they invested it in the stock market or in real estate or whatever they invested in. I don't know. I don't care. It wasn't my issue. I just was, giving them a bunch of money because they promised they were going to give me this great guaranteed blah, 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 blah. And they're out of business now. I'm so shocked. Greed, we're talking about greed. When people respond with, I'm so shocked, who's to blame, who's going to fix this for me, that's greed. A lottery guy, $100,000, he goes out, buys $100,000 of tickets. A week later, they're worth nothing, or they're worth, $78 or whatever he wins, right? Um, and then he complains about it. Well, somebody who knows that it's a lottery ticket and it's going to be not worth very much in a week, very probably, they're not going to complain about it. Probably they're not going to complain much. They're going to be like, yeah, well, I risked, I took a big risk, and here's the results I got. There's not a matter of they rigged it, or it's not fair, or it's a bad odds. You don't get somebody who says that after the results come in. That's weird. And I'm going to assert that I'm calling that greed. They could have researched it further. They don't need to be complaining and figuring out who to blame and what political candidate to elect to fix their lottery losses. That's greed. In the case of the casino, a person borrows money, goes and spends it at the casino, loses a bunch of money, and then wants to blame people and say the odds are stacked against me. This is a rigged thing. This should be illegal. All that stuff. Well, they could have said that before they went to the casino. They could have done that research before they did. So if they're complaining and blaming and want to fix, political solutions to economic problems, especially when they're global economic problems, that's weird. It's greed. Now, I don't mean this in a selective way. Lots and lots of people are greedy. Anybody who's never been greedy probably isn't very old, because as you go about your life, you're going to do greedy stuff, and then you're going to end up complaining and blaming people and trying to get somebody come and fix the results that I produced by my negligence. That's greed. When you want other people to fix your results for you, and you're complaining about the results you got that were based on you not doing more research and not doing more follow through, that's greed. We could also call it negligence, but more specifically, greed. In the case of a real estate investor, they put down $5,000 and borrow $100,000 or whatever, and then a year later or whatever, they say, I lost my whole down payment. My real estate value is now less than the value of the mortgage. I want to talk to my realtor. I want a new law passed. I want the courts to let me out of this. Well, there are bankruptcy laws, and there are laws that are available for protection of people who have speculated into debt and done poorly. Where they risked enormously and it didn't pay off for them. Well, there are a variety of responses that someone can take, but where we then are saying, well, anything but I took some risks and I was negligent, and here are the results I got. That's, to me, I'm going to call that greed. Now, if you say, I took some risks, I was negligent, and here are the results I got, and I want to campaign for a politician to fix it, and I want to have a revolution, and I want to, sue the bank and all that stuff. Okay, you can't. It's not that you shouldn't do lawsuits or that you shouldn't do campaigns or voting or whatever. If you do, you do. It may work for you. The orientation of I want to blame somebody and I want somebody to be my savior, that I'm going to categorize that as greed. So people borrow, all this money from the government through the FHA or the VA or maybe some government-related thing like the Fannie Mae or Freddie Mac, and they go and spend all this borrowed money on real estate and then say, well, now you guys want me to pay the $35,000 that I borrowed? Well, the house isn't worth it. Just how can you ask for that? Well, you can ask for it the same way if you go to the mafia and ask them for $100,000 and then go spend it at the casino and risk it and gamble and lose. The same way they're going to come back and say, Oh, you owe us that $35,000. You only have 65. We're going to take that. Now you owe us an additional 35 that you lost. You still owe that to us. So people may have this uh, sense of, you know, um, it's totally different. Well, it was the government approved program, so it must be safe or a good risk or whatever. The government approved annuities the insurance companies were doing. Well, the government approves the state lottery, but it's really bad odds. The government approves casinos. Uh, Actually, I'm not 100% sure. Maybe it's that the Indian reservation governments approve casinos. Uh, I think no. I think there's an Arizona Gaming Commission in the state of Arizona. So there's some, or Las Vegas has a gaming commission. Right, Las Vegas has casinos. So they have some kind of state regulation. But just because there's state regulation of something doesn't mean you should do it, and it doesn't mean it's a good investment risk for you to just dump a bunch of borrowed money into real estate, or dump a bunch of borrowed money into a casino, poker game or whatever, or into state lottery tickets, or into an annuity contract with an insurance company. Just because they guarantee it doesn't mean it's actually going to happen the way they guarantee it. It's just a legal guarantee. It's just a legal guarantee. Doesn't mean it's going to happen. And when insurance companies make promises that are really hard for them to keep, they go out of business sometimes. Their business is risk. They make huge promises. $100,000 here, $50 million or $500,000 there, all these promises for payouts of policies for life insurance, health insurance, car insurance, mortgage insurance, and these annuity contracts that are basically insured. Those are very risky, and insurance companies concentrate lots and lots of risk. And sometimes it doesn't go very well, like they go out of business. So people who think that their investments in stocks can't lose all their value like a lottery ticket, well, they're wrong. You can lose all your value. AIG, Enron, Kmart, US Air, uh, Lehman Brothers, Bear Stearns, Merrill Lynch, Washington Mutual, Countrywide. There's a very long list, especially in the last several years in the U.S. There were a lot of companies, Fannie Mae, Freddie Mac, lots of companies that had very serious declines in their stock prices. Some of those companies went out of business, or at least filed bankruptcy and were able to stay in business because they were bought out, or through a Chapter 13 bankruptcy, which allowed them to stay in business but get rid of a bunch of debt. Well, there's risk in investments. Gold has risk. US dollar has risk. Confederate dollar has risk. Stock options have risk. Lottery tickets have risk. Annuity policies insured by the insurance company and legally enforceable have risk. So I see the big issue in terms of the redistribution that's going on globally in economics is people that are greedy are losing big time. In other words, people who've been negligent, or who are in that mode of, let's have a political fix and let's figure out who to blame about this. I don't think it works very well. In many other cases, there's been major economic transitions and people have tried blame and, let's elect a new savior to fix the housing market, or to fix the, USSR. Well, you can elect, or you can have some new leader come in, but if the USSR has some serious economic infrastructure issues, that doesn't change just because you elect a new person. Sometimes the appropriate thing is for a really big centralized bureaucracy to splinter and dissolve into smaller units. That sometimes is good, or is what happens. So there's a redistribution underway from some of the more greedy or negligent parties and businesses towards other businesses and other parties, other individuals. This, to me, is very clear, very simple, and in and of itself, kind of intriguing. kind of exciting, a lot of opportunity. When you have this much greed and negligence, it's so easy for someone who is attentive and committed. It's so easy to do well in these circumstances. It can be so easy, but it might not be through the methods that worked well in the 1990s. It might not be through the high-risk methods of some of these insurance companies or through, gambling on state lotteries or at casinos. Those may not be the best odds. Those may not be the best methods. Those may not be the methods that are rewarded by markets, because markets reward intelligence and attentiveness, not greed and neglect. That's my message for today. I'm JR. Visit thedominoileffect.com, One-Eyed Kings wealthclub.com, JR, Fibonacci.wordpress.com. Be prosperous, be clear, be intelligent, be wealthy, and have fun. Or don't have fun. It's up to you. You can skip that one if you want. You can skip any of them if you want, but have it all if you want.